Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock in which we are going to talk about the earnings report of Lockheed Martin, which recently released its first quarter earnings. In this quarter, we have seen revenues have grown for the company, but that revenue growth is not really accompanied by growth in the bottom line. Instead, there is slight decline. So, even though there is this momentum, but I feel that momentum is slowing and the company's earnings are not really likely to continue to grow at the pace which we saw earlier. So that's why I have titled this session as Slowdown apparent because I feel moving forward the slowdown in the earnings is likely to last at least for next few quarters and even though the guidance it still remains on the higher side, we are pretty much likely to see the company find it challenging to meet its targets in this challenging business environment. So let us now straight away head to the financial tables. It's a earnings statement. This is the consolidated statement of earnings. We will consider the income statement along with the cash flow statement to see how things are shaping up on the earnings front, where the money is coming from, and how the money is being spent by the Lockheed Martin. The net sales for the company were on the higher side with this growth of more than 10 percentage point in the net sales that pushed its gross profit higher. No, not really. Gross profit not higher. This is the gross profit, which is slightly lower in comparison to the gross profit for the quarter ended March 26, 2023, because the cost of sales were substantially higher this time around. So all the increase in the net sales have been eaten away by this rise in the cost of sales, and that is one key reason why we are not really seeing any growth in the operating income, or for that matter, even in the net earnings. The net earnings came in at $1.54 billion in comparison to $1.68 billion a year back. That's reflecting the decline of around 7 to 8 percentage point. This is mainly attributable to this rise in the cost of sales. Otherwise, most other items remain more or less on the similar footing. The EPS came in slightly lower. Now we also have to look at the segment-wise result. The aeronautics contributed at $6.84 billion, while the missiles and fire control brought in almost close to $3 billion. Rotary and mission systems contributed somewhere around $4 billions, whereas the space segment brought in another $3.2 billion. And all these segments put together have these total figures of $17.2 billion, which is the growth rate of 14 percentage point, and the highest growth is coming from this segment, which contributes the least of $3 billion. And then if we consider where the has risen, we can figure that out using these operating profit. For the four segments we have listed here, there is decline in the operating profit for the missiles and fire control even after it has recorded substantial increase in the revenue, and that is where I feel is a lot of money being spent, but it is still to show results. But in coming quarters, we are pretty much likely to see these higher cost of sales for the missile and fire controls also eventually contributing to the better margins. We also have these margin figures for all the key segments. We will not go into the details of the balance sheet. Balance sheet still remains on the strong footing. There is no concern regarding its sustainability, viability of the company. So we will skip this part. And now we come to the cash flow statement to figure out how the money is being generated and where that money is being spent. From the operating activities, the company brought in US dollar 1.635 billion, which is increase over the prior number of US dollar 5.156 billion. So even though there is less net earnings number, the cash generated by the operating activities remain on the higher side. For that, you have to take a deeper look on these some of the key items, and you will get to see how these small changes have impacted big by providing us better cash inflows from the operating activities this time around, even though the net profit remains on the lower side. Of that, the money spent on the capital expenditure reduced the net cash pile by US dollar 378 million. For the financing activity, there was no cash outflow. Instead, from the financing activity, the company brought in money by the issuance of long-term debt and net related cost. As a result of this US dollar 1.98 billion cash inflow from the issuance of the new debt, there was this in increase in the cash pile on account of financing activity, whereas last time around there was decline by US dollar 1.4 billion. Simply, the company has tried to shore up its cash position by raising new money from the market, and also it has spent money on the repurchase of common stock, and at the same time it has also paid back to the shareholders. It has tried to reward them for the faith in the company by going for the repurchase of common stock and paying the dividends. This time around, the company's cash and cash equivalent is looking much healthier as there was the influx of user 1.35 billion, and that has pushed its total cash and cash equivalents to US dollar 2.79 billion. These were pretty low at the start of the period at US dollar 1.44 billion, but now I think it is good enough for the company of this size to meet any contingency, meet any requirement for the business challenges, or for that matter, even any business opportunity. We will now consider these technical analysis using the charting for the Lockheed Martin shares price over last few sessions, last few weeks, last few months, depending on your time horizon. We will consider its price actions and try to figure out if there are any opportunities for us to trade and invest. In the Lockheed Martin share price, we have seen the slightly bearish tendency over last few trading sessions since it made its high at US dollar 473. We have seen it continue to consolidate with slightly bearish bias. It is not overtly bearish, it is simply going sideways in a narrow range of around 4 to 5 percentage point, and only recently it made this new swing low at US dollar 450. We have the formation of lower lows and lower highs now, but if you figure out the difference between these recent swing lows and swing highs, you will see that it is pretty minor. There is not much of a big difference between the recently formed swing lows and swing highs. it is almost going sideways with slight inclination on the bearish side. So there is not much to be worried about if you have invested or trading from the short term perspective. I feel it is simply the case of trying to exploit the given range where you try to figure out the support and the resistance, and then using these parameters you can take advantage of the situation and try to profit from it. Given the fact that we have now the slightly bearish inclination, I feel adopting a sell on rally approach is going to be a good deal, while at the same time you also have to pay attention to the support zone to see if there are any emerging buying opportunities. And these company shares can be traded on the both the sides in the short term. If we expand our gaze to the medium term, we get to see that this is the case of bullish company. We have this formation of higher highs and higher lows in place, and given this formation, I feel even on these elevated levels, it is better for us to keep looking for the opportunities to go long. But then you also have to keep in mind the possibility of a extended consolidation. So you don't really want to lose too much money if it stays into consolidation zone, or for that matter, reverses course. The first thing you should keep eye on is going to be its recent range, where the lows are, where the highs are, and using the recent range, you can pretty much take advantage of these bullishness in the stock price of the Lockheed Martin. As long as it holds this trajectory, you can be fairly confident of its ability to continue to rise. And with that possibility in mind, I feel you should pay attention to the price moves anywhere close to 440, 450 price band, and over next few weeks, if the formation continues to remain range bound and there is no substantial decline on the lower side, I feel that will be the time for initiation of the fresh long term, fresh medium term trades on the long side, and you can try to anticipate the possible rise beyond these immediate swing high of 473, maybe even 480, 490, for that matter, even 500 might be possible. So we will have to see how things shape up, and it shouldn't really decline much from the current levels for us to feel confident enough for the initiation of the new long trade. But if it drops below these prior swing low and doesn't really give us any good sense of these be this share price action breaking above this immediate swing high. In that scenario, I feel initiating the short sell trade while adopting a scalping approach can also be tried. So depending on how price action shapes up over next few weeks, you can make a call on whether to go long or whether to go short. Now we expand our gaze further, and in the long term, the things have looked bearish for the second half of fiscal year 2023, but that seems to be behind us, as there is this stabilization around the price levels of 400. Twice it has rebounded from levels close to 400, and this time around it is holding quite well, close to, pardon me, close to 450. So that gives us the hint of the strong belief on part of market participants on the possibility of the Lockheed Martin continuing to do well in the long run as well. It has a pipeline of orders exceeding US dollar 150 billion mark, and this proves that even in the long term, the company has a lot of opportunity to grow and expand its business operations. So, keeping that in mind, I feel from the long term perspective, adopting a buy on dips approach is going to be the most prudent thing to do. And for that, all you have to do is pay attention to this immediate swing low. If there is a correction and this share price drops below and anywhere close to this prior swing low, in that scenario, you should wait for the consolidation to ensure, and after due consolidation, if it doesn't really breaches this prior swing low, I feel you can pretty much take the advantage of the situation and try to go for a new long trade, new long investment where you can target the price moves towards 500 or even beyond that in the long run in the second half of this year. So over next few months, see how things pan out for the share price of the Lockheed Martin. If there is slight dip anywhere close to 400 but above the prior swing low, then that would be a good chance to invest and trade from the long-term perspective. So that's all from my side for today's session of Daily Stock, in which we took a closer look at its earnings report, which is a mixed bag. There is growth in the revenue, but the net profit didn't really rise. Instead, there was decline in the net earnings because the cost of sales have risen sharply. On the technical side, there is not much of a bearishness in the stocks, but the growth is slowing to some extent, and I feel you will have to adopt a cautious approach. So, being cautiously bullish is the best approach, I feel, at this juncture for the shareholders, for the market participants in respect of the Lockheed Martin stock. Now it's time for me to say goodbye for the day. I'll be back tomorrow with an equally interesting company to work with. So do join back, and we will be taking a deeper look on the company of your choice. You can also write to me in the feedback, and I will try to include that company in the next session. Thank you all for joining in. See you next time around. Till then, goodbye.